I panic sold. Just kidding. But seriously, I did exit a position. The portfolio performance recap for November 2025 is going to be juicy. Let's dive right in. Cue the logo. Let's start off with the market's performance. For the month of November, the S&P 500 gained about 0.1%, 0.3% total return. In a change of pace, the market did not hit a new all-time high for the first time in 8 months. When we look at the companies that make up the S&P 500, we can see that tech had mixed results. Microsoft, Nvidia, and Meta fell, while Apple, Amazon, and Alphabet all gained. Over in our corner of the market, consumer packaged food, farm products, alcoholic beverage, confectionery companies, non-alcoholic beverage, and restaurant companies all gained. Pretty much everything except for my portfolio gained a lot. Okay, let's move on to the portfolio performance. I deposited $100 into the account on November 1st, 2025, and at the end of the month, the portfolio balance was $1,600.49. This means the portfolio lost $88.42 for the month, representing a 5.2% decline for November. This is the third losing month in a row. Given the S&P 500's 0.3% return, we lost 5.5 percentage points of alpha by following our strategy and not being invested in the S&P 500 this month. All shucks. Looking at our performance chart versus the S&P 500, we see that we last were beating the market in August. Since then, the gap in performance has only widened. Since inception, the portfolio has had a minus 2.4% CAGR on a money-weighted basis, while the CAGR on a time-weighted basis was minus 4.2%. Given the S&P 500's 17.1% CAGR, the portfolio trails the S&P 500 by a 19.6 percentage point CAGR since inception. It is very difficult to compete with trillion-dollar tech companies circle-jerking each other with $100 billion investments and orders. Let's take a look at the portfolio holdings. Before we jump to that, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Also, don't forget to turn on your notifications if you are watching on a mobile device. Okay, so Pepsi has risen from the ashes and has ascended to become my largest holding. With 2.3 shares at a cost basis of $143.26, this position is up 3.8%. Pepsi makes up 21.3% of the portfolio. I did add a bit to this position and am super glad to have a large stabilizing holding in my portfolio. Chipotle is now my number 2 holding with 7.71 shares at a cost basis of $43.60. This position is down 20.8%. Chipotle makes up 16.6% of the portfolio. I clearly averaged down a ton in Chipotle this month due to the improved valuation, but the dip kept dipping. Still, I think this is a good company that continues to grow. I'll dive more into this in a dedicated Chipotle stock analysis video coming soon. So now we have Celsius, once my largest holding, with 5.54 shares at a cost basis of $29.15. This position is up 40.4%. Celsius makes up 14.2% of the portfolio. I trimmed Celsius this month to tax loss harvest. I have no complaints about this company and hope to add once my wash sale period ends. Let's skip down to Cava. Cava is my number 5 holding with 3.28 shares at a cost basis of $68.41. This position is deep in the red, down 28.5%. Cava makes up 10% of the portfolio. I'd hoped Cava would be like a faster-growing Chipotle for my portfolio, but I am becoming more and more disillusioned with this position. Next, let's talk about Chagee. Last month, Chagee was my number 6 holding, but it was down about 30%. I sold out of Chagee and booked a loss for a couple of reasons. First, though the company showed massive revenue and free cash flow growth over the past 5 years, their recent earnings clearly demonstrated a reversal. Even being the smallest amongst its peers, such as Luckin Coffee and Mixu, Chagee was not even the fastest-growing Chinese beverage restaurant anymore. Second, the losses helped dent gains I have outside of this portfolio, so I tax loss harvested this position. Would you have sold Chagee? Check out my recent Chagee stock analysis video for a deeper dive into the company. Now let's look at the cash position. I now have a record cash position of $225.29, or 14.1% of the portfolio. I am looking to deploy this very soon. Last, let's visit the portfolio metrics. Because of the changes I made, gross margin and cash conversion cycle are now improved. However, revenue growth, free cash flow growth, return on invested capital, net debt to EBITDA, and yield on cost are all worse. Chagee was a well-valued, fast-growing weight for these metrics. However, I am starting to wonder if using the 5-year time frame to assess growth is too wide. It certainly was for Chagee. As we enter the last month of the year, the portfolio is again undergoing change. I see this as a positive. If the positions are not serving my portfolio, then why keep them? Ultimately, this portfolio is about learning and growing. I'm excited about iterating the strategy for 2026. Many thanks for watching. What do you think about the portfolio? Share your thoughts below. It is always great to hear from you. Check out some more videos right now, and don't forget to put your money where your mouth is.